accounting process. It includes input, process, and after analyzing, we have to interpreting. Interpretation is important, and communicating, and the output. It is nothing but giving information to the users. In the same way, let us know about the accounting cycle, a complete sequence of accounting that begins with the recording of business transaction and ends with the preparation of financial accounts is known as accounting cycle from beginning to end. That is, it's a complete sequence. It is like a cycle, it rotates. So, a complete sequence of accounting that begins from the recording of business transactions and ends with the preparation of final accounts is known as accounting cycle. It includes general ledger, general and ledger is divided with each other. There are so many journals, ledger, and trial balance, trading, trial balance, profit and loss account, and balance sheet. In future, we will discuss about the forms of these and model of all these accounting cycle part and parcels. So, in detail, in our next classes, we will learn what is a journal, what is a ledger, what is a balance sheet, what is a trial balance sheet, what is trading, and various other forms. So, in accounting cycle, we will discuss in future about all these forms and models. Now, let us know what is an accountancy. Accountancy is nothing but a systematic knowledge of accounting which covers rules, regulations, principles, concepts, and conventions, standards that govern the accounting process is known as accountancy. So, in simple, accountancy is nothing but a systematic knowledge of accounting, writing accounts, which covers, it covers, there are so many rules and regulations, what is debit and what is credit, and what is the rules of ledger formation and preparation of final accounts, and everything are known as the accountancy. It is nothing but rules and regulations, principles and concepts, conventions and standards that govern the accounting process is known as accountancy. So, accountancy is a book and it is filled with rules, regulations, forms, principles, and everything. Now, let us know the difference between bookkeeping and accounting. Now, let us know what is bookkeeping and what is accounting. Bookkeeping, it is concerned with the recording of business transactions, narrow scope in nature, it is in narrow minded, so its scope is very limit. First bookkeeping comes and it continues with accounting. So now let us know what is an accounting. Bookkeeping plus it includes something. Those things are classifying, analyzing, interpreting the business results, and its scope is wider than the bookkeeping. So, not only bookkeeping plus something is known as accounting. The second one, the objective, when you think about the objective of bookkeeping and accountancy, we will have the following classification. The objective is maintenance of systematic records. Only with the objective of maintaining systematic record we will maintain the bookkeeping, but in wider range it covers, that means accounting covers ascertaining profitability and financial performance of the enterprises. With these objective, accounting process is aimed. And the third one, the nature of bookkeeping is often routine and clerical. So daily routine activity, bookkeeping is a routine activities, and most probably the clerks were having responsibility to maintain the records. So it is having in nature. It is often and very often we routine the process of the the clerk's work is known as bookkeeping. So nature is often routine and clerical. But specific when we think about the specific nature of this accounting, it is analytical and executive in nature. So only executives will do the accounting process, and it is not only clerical, and accounting is a analytical. Fourth one, it is the responsibility for recording business transactions only. Non-business transactions were not recorded in bookkeeping. So it is the duty of the bookkeeper, and it is responsible for recording business transactions only. When you think about the accounting, responsible for finalization of accounts and revealing the result of the enterprises, we are in need of accounting. So bookkeeping plus an extension of the bookkeeping objective is known as accounting. Does not supervise and check the work of accountant. Nobody will check the transactions in case of bookkeeping. So there is no need of supervision. Only the clerk will do the work and he will goes away. So supervision nature is not included in bookkeeping, and checking process is not a part and parcel in bookkeeping. And in case of accounting, an accountant checks and supervisor supervises the work of bookkeeper. So after bookkeeping, supervisor will supervise, and it is the process of accounting. It is done by the junior levels staff in accounting department. So bookkeeping is very convergent in nature, and accounting is very divergent in nature. So junior staff will look after bookkeeping, and senior level or senior staff for accountants perform the accounting work in a wider range. So advantages of accounting. There are so many advantages. The permanent and reliable record. So accounting includes the permanent and reliable record. It is treated as the reliable record, and it is permanent for all the future maintenance. Next, results of the business operations. It is useful for knowing the profit or loss. So it also known as the ascertainment of a financial position. It gives the full picture availability. It is the faculty of comparative study, profit, sales, expenses, etc. It is known as the faculty or advantages of accounting. Profit, sales, expenses, etc. So facility of comparative study is possible through accounting. Control over assets. There are so many assets in business transaction or business firms. It is known as building, machinery, furniture, etc. So the advantages of accounting may be classified into five parts: permanent and reliable records, net for getting net results of business operations. It is useful for ascertainment of financial position. It gives full picture of availability. faculty facility of comparative study. It gives the facilities of profit, sales, expenses, control